Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Global markets are navigating a complex web of geopolitical shifts, sector rotations, and persistent inflationary pressures. The landscape is changing rapidly, and investors must stay agile to capture emerging opportunities while mitigating downside risks. In the digital asset space, a significant structural shift is underway. Sberbank, Russia's largest financial institution, is set to launch its crypto infrastructure on December 1st. This move comes as Moscow enforces new regulations effective September 1st, signaling a state-backed embrace of blockchain technology. Amidst this geopolitical realignment, Bitcoin is trading at $64,174, displaying bullish MACD signals that suggest renewed institutional interest. However, traditional finance faces its own bottlenecks. IPO allocation scarcity is hitting crypto investors hard. Demand for digital asset equities far outstrips supply, creating severe liquidity constraints in secondary markets. This scarcity limits access for retail and institutional players alike, forcing a re-evaluation of how digital asset firms are valued and traded. Meanwhile, the equity markets are undergoing a profound rotation. Institutional portfolios are shifting capital away from the magnificent 7 megacaps toward mid-cap S&P 500 members. This divergence is driven by a change in AI capital expenditure strategies. Spending is no longer concentrated solely on NVIDIA but is diversifying across the broader infrastructure stack. This broadening of the AI theme offers new entry points for investors looking for value outside the overvalued tech giants. On the macro front, inflation remains a stubborn adversary. In Taiwan, CPC Corp has announced domestic gasoline and diesel price increases for next week. This local escalation reflects broader global inflation pressures, mirroring trends seen in the United States where the CPI remains sticky at 332.568. The Federal Reserve has held rates steady at 3.63%, refusing to yield to inflationary demands. This stagnation is squeezing household budgets, forcing families to seek back-to-school bargains amid economic uncertainty. The disconnect between monetary policy and consumer reality is widening, creating volatility in consumer discretionary sectors. Looking ahead, the absence of major economic calendar releases in the next 36 hours suggests a period of consolidation. Traders will likely focus on corporate earnings and geopolitical developments rather than macro data. However, the underlying tensions in crypto infrastructure, IPO liquidity, and AI Capex distribution will continue to drive sector-specific volatility. Investors should monitor Sberbank's December 1st launch for regulatory precedents and track the mid-cap rotation for signs of broader market health. The interplay between state-led crypto adoption and traditional IPO scarcity defines the current narrative. As inflation persists and the Fed holds firm, the market remains in a delicate balance between growth aspirations and cost of capital realities. Stay vigilant. The next move will likely come from unexpected quarters. That's your market briefing. Follow Rumour with AI for daily market intelligence.